welcome to Jinnah Institute's event on economic recovery and rebuilding in Pakistan before, during, and after the COVID impact. We are pleased to be joined here by two esteemed panelists. We have Asad Sayeed, who is a director and member of the Collective for Social Science Research, an economist by training, based out of here in Karachi. We are also pleased to be joined by Aqdas Afzal, or Dr. Aqdas Afzal, I should say, Program Director and Assistant Professor of Economics and Public Policy at Habib University. Both of them are economists by training. Both have followed COVID events very carefully. The material for today's conversation comes out of their chapter on a forthcoming report by the Jinnah Institute, which you'll be able to see on their website soon. Gentlemen, thanks so much for agreeing to be part of this event. And at the outset, Asad, I'd like to ask you, Pakistan's economy wasn't faring all that well to start off with at the time when the COVID impact hit back in March of 2020. We were in the throes of a prolonged and grueling economic adjustment under an IMF program. How do you think, how do you see where Pakistan's economy stood at that point in time? And how did COVID aggravate or provide opportunities for navigating the ongoing adjustment? Asad, you might need to unmute your mic.
Yeah.
Thank you.
Thank you very much to Jinnah Institute for giving us this opportunity to speak and to put our views across. So, Khurram, I think that you mentioned correctly that we were in the throes of a very sharp adjustment at the time when COVID hit, when the pandemic hit the world, and that was something which we have become quite used to, because at least for the last decade and a half, Pakistan lives through what they call a boom-bust cycle so far as macroeconomic performance is concerned. And this was the bust as sort of the trough end of the third episode, perhaps, in the last 15 odd years when COVID started. So growth was already down, investment was already down, inflation was very high, and tax revenues were at a historic low. They were actually lower than what one would, what even in a bust end of the cycle, revenues ought to have been. The year 2019-20 was a very unique one in Pakistan, where revenue collection was less than the nominal GDP growth. So, and obviously associated with that adjustment cycle was high levels of uncertainty in the markets and high levels of suffering for people because of high inflation and the lack of employment opportunities. Now, it's important, I think, to underline that this has become the pattern of the Pakistani economy. So, and there are several structural factors that have not been addressed for a very long time. Probably more than 2 decades, and they're very deeply entrenched political economy issues, and as a result, we were really not well placed for the sort of slowing down that COVID required, or the sort of lockdown that COVID required. Now, if you want, I can go into details on what those structural bottlenecks were, or otherwise I can do that later also. But I think we will include that in our chapter, so it would be useful to kind of recap on that.
Okay, we can go into the structural bottlenecks a little later, Asad, but for now, could you tell us more about your findings on the specific impacts of COVID in the lockdown measures? How did the economy suffer further as a result of the arrival of the virus and the kind of mitigating measures that the government had to take to manage the fallout?
I should go into that, or will Aqdas respond?
Chalo, I mean, we can move to Aqdas for now.
I can just start it off if you want.
Yeah, please do.
Okay. Okay, so Pakistan had a very, of all the regional countries, I think, and globally also, it had a relatively short lockdown. So the real lockdown in Pakistan kind of lasted not more than 2 months or 2 to 3 months. So by the middle of May and early June, and it all started the third week of March 2020, and by early June, a lot of things, a lot of economic activity had started. Manufacturing, which even non-essential manufacturing started. A lot of transport had opened up. So it was a very short lockdown of about 2 months or so. Now that's important to highlight because whatever revenue loss that you would suffer was short-lived, and the impact on employment and livelihoods was also, in a relative sense, much less harsh than it has been in other countries. Now, whether that was the right thing to do or wrong thing to do is a different debate, I think. And to be fair, the numbers, COVID numbers and cases, at least the way it's officially reported, did not sort of go out of control. So in hindsight, perhaps it could be said, at this point in time at least, that really did not, it did not impact on the severity of the pandemic spread, and it was short-lived. So it was in some ways fortunate for Pakistan. Yeah.
Okay, Asad, I want to leave you with two thoughts that I'd like you to mull over, and we'll move on to Aqdas for now. But I'd like you to focus a little bit on the fact that this was the 1 year in which Pakistan, in many, many decades, in fact, in which Pakistan actually reported a negative growth rate, first of all. That's fiscal year 20. And this was also, as you rightly mentioned, 1 year in which revenues very unusually did not increase in absolute terms at all, because normally, even in the worst case scenarios, we see revenues rise by at least as much as nominal GDP or at least as much as inflation. But in this particular year, real revenue collection actually fell behind. And I'd like
actually,
to...
that was the previous year. That was...
Right.
Yeah.
But coming from that base, the fact that revenue performance, even in fiscal year 20, was pretty bad. I mean, there was plenty of room to show improvement, given that as the base. I'd like to come back in a moment and ask to what extent can we attribute these to the fallout from COVID, and to what extent was the government on course, or was the economy on course to register these kind of outcomes anyways, regardless of what happened in the last quarter of the fiscal year. But in the meantime, Aqdas, if I may ask, how do you see Pakistan's recovery post-COVID? A lot has been made about the rapid recovery in exports, rising remittances, the current account surplus, and the increasing improvement in what the State Bank calls high-frequency indicators, industrial manufacturing coming back. And yet we're still on course to show a growth of about 1.5% going by IMF.
Yes.
Going by IMF projections, it's possible the government might show slightly higher by the end of June. But nevertheless, even if that's slightly higher, we're not talking of a very large growth rate nonetheless. But how do you see Pakistan's recovery post-COVID?
Well, thank you for your question, and thank you for this opportunity to participate in this webinar. Frankly, I don't see a very robust recovery. I don't see any probability or possibility of what is known as a V-shaped or a sharp recovery in the Pakistani economy. And that contrasts sharply both with, bigger economies like the US and China, but also in the region, if I'm not mistaken. And I think the primary reason behind, the very low probability of a modest or a significant recovery in the economy has to do with the general, type of economic thinking or economic planning thinking that has overtaken this administration. Partially, the reason why we are seeing this this thinking, and by this thinking, I basically mean this focus on fiscal consolidation, has to do with the fact that we are now in an IMF program, and through protracted negotiations, tariffs, electric tariffs are going up, and subsidies are being cut, and the whole 9 yards. But I find this administration's focus on fiscal consolidation and their focus on containing the budget deficit somewhat misplaced in a year when a lot of people have suffered immensely, both economically and physically because of COVID-19. And I find this very perplexing because if you look at some other countries, again, I mean, I'm not trying to go for apples versus oranges comparison. I'm just trying to see, the type of economic thinking that is now taking center stage in the world. So if you look at the new Biden administration, I mean, they are talking about putting a stimulus of about $2 trillion in their economy. And this is on top of the $900 billion that they've already put into their economy. So, in trying to simplify it, we see the state of fiscal policy again taking center stage in macroeconomic management, policy making, and this is going to be the case for some time to come. But when it comes to Pakistan, we have seen that this administration has shied away from using fiscal policy measures. I mean, for the most part, policy measures have come from the State Bank of Pakistan. I'm sorry, there is some feedback, very strong feedback coming in my ear. I don't know where that is coming from. Maybe it's a bad connection. But I was saying that we have seen all the measures that we have seen have basically come from the State Bank of Pakistan, which has basically tried to inject liquidity into the market. But if you look at the actual impact of that, I think that impact has clearly been missing. I mean, you have written on this. So the government, as you know, announced a total package worth about 1.2 trillion rupees. But there was a lot of double counting there. For example, the usual money they spend in in as far as support prices, or in the when buying commodities is concerned, I mean, they also put that into that figure. I mean, that is not over and above of what they would have spent if they had not been a crisis. So I was looking at some State Bank of Pakistan numbers, and I looked at the increase in loan to the private sector. And this is, again, despite the sound and fury, that all this money has been made available to business. In the last 1 year, for instance, from January 20 to January 21, there has only been a modest increase of about 3.5% in increase in loans to the private sector. So by all standards, this is a very modest increase. So in my thinking, in my analysis, I think the administration should be thinking about looking at fiscal policy as a tool to revive the economy, because that is what all the Western nations, or those nations that used to um, not talk about fiscal stimulus, are now heading towards. And that thinking is clearly missing from this administration. And then you asked some other questions about the current account deficit, you asked about poverty. Um, if you look at the numbers coming from the World Bank, in the Indian subcontinent, in South Asia alone, about 50 million people are going to be pushed into poverty. And then if you look at the work of Pakistani economists like Hafiz Pasha and Shahid Qadar, they estimated that about 15 to 20 million Pakistanis were going to be pushed into poverty. Now, even if we assume that the government has done an amazing job of dealing with the economic fallout from COVID-19, at least 10 to 12 million people are going to be pushed into poverty. And I think that is a very, very serious issue for this government, because I don't see any kind of a policy to help and assist all these additional people who are going to be pushed into poverty. So that, to me, is a very big concern. Khurram.
Okay. Aqdas, I'll come back to you in a moment. But there are a number of questions that arise from what you've just shared with us. One of which being that does Pakistan have the luxury to engage in a fiscal stimulus, or to provide a fiscal stimulus of the sort that Western countries have done? Let's remember that even in the aftermath of the great financial crisis, there were many countries that used a stimulus to try and address the kind of problems that were coming on them from it. But many other countries had to undertake adjustment in response to this. Pakistan lay among those countries that had to undertake adjustments, slow down its growth rate in order to deal with. The question is of hard binding constraints on the fiscal account. Do we even have the space? Can we afford, in the absence of major revenue reforms on the revenue side increases? Can Pakistan really afford the kind of massive fiscal stimuli that Western countries have been showing? But Asad, just to return to you quickly, how possible is it, or how easy is it? Let me put it this way: is it possible to separate out the impact from COVID on the economic outcomes we saw in fiscal 20, and the impacts that were already there due to the structural bottlenecks in the economy that you referred to in your talk?
No, I think that there is a continuation. The slowing down, or the cooling off of the economy, which had started earlier, consolidated. In fact, paradoxically, the COVID situation helped the government to further slow it down. And we saw that imports fell significantly, and as a result, your trade deficit improved, and as a result, the current account deficit improved. Now, there was some policy, there was some, perhaps we may be early on saying that, but there was some good policy initiatives, probably this Russian digital account or whatever, which enabled the remittances not only to sustain, but to increase and provide a cushion to the current account. And we had 6 months of a current account surplus. But remember, whenever, even in Pakistan, when we go for an IMF agreement, or when we enter a bust cycle, there is always a current account surplus for a short time. The problem over here has become, and I see no way out of this, is that we do not have any levers for growth in Pakistan. There is the only formula for growth is the one which was first initiated by the Musharraf government and then repeated by the PMLN government. And that is to lower interest rates, to overvalue your currency and increase government consumption through higher debt. Now, all three of them, everyone knows, is going to it's going to land you with a really bad hangover the next morning. So you are going to it's going to increase your trade deficit. It's going to which is going to impact on your current account deficit, and that plus your debt burden is going to start then depleting your reserves, and you're back into the familiar territory of a foreign exchange crisis, and then the IMF comes in, and the story goes on. The other element, I think, on the domestic front, and this particular government has been remarkably bad at it up until now, is revenue. So really, one of the structural issues that plagues Pakistan is the inability to incrementally formalize the economy, and also to broaden your tax net. So as a result, we're stuck in the territory of one of the lowest tax GDP ratios, not only in developing countries, but also in the region. So, there's nothing that this government or any government can do to have any other sustainable growth path for the economy. We all know that our export competitiveness has eroded, and eroded significantly. We all know that we have, in many ways, a binding energy constraint, and that binding energy constraint has taken different forms. So it used to be, generation used to be a problem 10 years ago, and now it's distribution, and it is also the financing of cheaper fuels. The fiasco we went through this winter only on LNG purchases is a case in point. And obviously, nothing has been done on energy distribution. As a result, your circular debt is getting out of control. So I suppose your fiscal window just closes because you just don't have that luxury. You cannot raise revenues, number one. You have contingent liabilities that the circular debt creates, and you cannot increase your exports beyond the point. You cannot break through that threshold as other competitor countries have done. So we're pretty much stuck in that muddle, and in that we can celebrate the reduction of the current account deficit for some time. But we know, and as you wrote, Khurram, today, that the moment we start getting into a little bit of growth, onto a growth path, you have an increasing trade deficit, which then sort of creates a spiral into the current account and then into the reserves. And that's really because our productive capacity is so limited, and we haven't been able to allocate resources to productive sectors over the years. And there seems to be no, and that doesn't seem to be on the radar even at any point in time, even right now. So, I mean, on the whole, COVID had an impact. We did not do much for the poor. We could not do much for the poor, I suppose, because our fiscal hands were tied. We tried a few things through the monetary sector, but there's only so much you can do. So that's where we stand.
Okay, Aqdas, given these vulnerabilities that Asad is so carefully sort of laid out for us over here, how much room did this government have, in fact, to craft a policy different from the one that it actually came up with? The thinking behind their policy seemed to be that they provide supports to the owners and controllers of capital in the hopes that those people will then put that money to good use through investment and through keeping their business operations running, and through that create employment opportunities and increasing and raise incomes. But you're saying that there was room to do more to directly target the poor, perhaps. But given these hard binding constraints, how realistic is that expectation in your
Okay,
opinion?
first of all, let me talk a little bit about the packages that have been given out to the housing and the construction sector. And the problem with that strategy is that economic demand, and Asad and I have actually talked about this in our chapter. The economic demand is actually going to be a function of real income, and as long as you don't, economic demand for housing is going to be a function of real income. So as long as the real incomes are not going up, you can keep giving subsidies and packages to the construction sector out of your own pocket, which is basically what is happening with this government. That is not really going to bring about an economic revival overall, because people simply don't have the money to buy these new houses. So that's one point that I want to make about the tools that have been used by this administration. So I think this focus on tried and tested and failed avenues of giving handouts or subsidies or packages to construction and housing is is not going to work. Then let me come to another couple of things that you raised earlier, and I was not able to answer that. Just very, very quickly, and of course you know this, that we are already now running into a second month of current account deficit. So this, celebrated and feted current account surplus didn't really last, and it wasn't going to last at all. It's just that our competitor countries are offline right now because of COVID-19, and as soon as they start coming online, our orders and our current account gains are going to disappear. So it's only very, very temporary. And regarding remittances, I mean, we know that because of the fact that people are not traveling because of COVID-19, so these informal avenues of bringing money into Pakistan have all but dried up. And so that's one reason why the remittances have gone up. And I think it's anybody's guess as to what is going to happen to remittances once international travel picks up again, as the world starts coming out of the COVID crisis. Now, let me try to answer your question about the fiscal space. I think when it comes to hard constraints, there are two ways of going about answering this question. Number one, in theory, a government can borrow any amount in its own currency, and it can always afford to pay back. But look, I mean, you would say that's a silly argument. I mean, it doesn't really pan out in the economic or financial system. But that's one way. And this could have been that year when the government stops thinking about fiscal consolidation and just thinks about expenditure. And in theory, they can borrow in their own currency and they can pay it back. But I think a realistic answer to your question would be that the solution lies in the particular and prevalent political economy that we face in this economy. And I think there is going to be some, probably time has come to question the way we are allocating resources and expenditure in different heads in Pakistan. And I think maybe the discussion needs to take place within the confines of political economy as to who is going to get what.
Aqdas, we've also seen that in the same quarter that you are saying saw large numbers of people fall into poverty. Profits reported by listed companies on the stock exchange were probably higher than I've seen them in many, many years. And government ministers actually took to public platforms on social media to try and present this as evidence of the success of their policies. How much do we know about if corporate incomes were rising? How much do we know about what was happening with real incomes among the poor during the same time? Could it be argued that along with the increase in these corporate incomes, there would also be a trickle-down effect that would be raising incomes for the working poor and for those who are not working, perhaps, in indirect ways at the same time? Would the trickle-down effect have been powerful enough to have also lifted all boats along the way?
I don't think so. I think there is a very big question mark when it comes to trickle-down theory and trickle-down economics. I think what the labor gets at the end of the day is going to be a function of their bargaining power. And as far as I know, I don't think there has been any trickle down when it comes to real incomes for people. And matter of fact, one reason why poverty has increased so drastically in Pakistan is only because of the fact that no trickle down has happened in any realistic sense. And when we talk about corporate profit, I think it's just a blip. And I think for any real change when it comes to even passing on value to shareholders, I think it has to be a sustained increase in income. So I think 6 months from now, what the situation is going to be is going to determine whether shareholders have, even if the shareholders have earned anything in all of this. So that's how I see it.
Okay. Asad, how are you seeing the government's response to the COVID crisis? We saw even long before COVID arrived, some buffers and some room for comfort had been built in the fiscal as well as the current accounts. There was a primary surplus on the primary balance. The current account, as you rightly pointed out, was also showing significant comfort compared to what it was when they first came into power. And they seemed quite keen, even in the months of November, December, January in the months of November and December 2019, to start using these buffers to bring about revival in the economy. They had begun saying as far back as November of 2019 that we've had enough adjustment now, and now it's time to shift gears and move towards growth. Do you think that the COVID provided perhaps the opportunity for them to do what they were already planning to do and start using these buffers to move the economy towards growth by providing packages for industry and industrial consumers in the hopes that this stimulus would then provide jobs and lift people out of poverty? You need to unmute your mic. I'm really sorry. There you go.
Sorry. Yes, they may. I suppose any government would want to end the stabilization bit of their tenure soon and get onto some sort of a growth path. Except that what sort of a growth path were they planning? I think it was not very different from what they've eventually done. So even in December 2019, we saw this talk about the construction sector, right?
Yes.
So now they took the opportunity of COVID to go the whole hog on that and provided all manner of incentives, which a lot of them, I think, very dubious, which as time goes by, we will see what their impact is going to be, not only on growth, but also on things that they professedly wanted to contain, and that was the circulation of black money, right? And so on the one hand, it was again housing based, which, as we all know, in the absence of growth which is happening independent of the housing sector, means more a stimulus to real estate rather than household. So, the one was that. The other on exports, I think they got a real boon because Pakistan opened up early, and it managed to get on the textile and garments front contracts from Laos, Vietnam, mainly Vietnam, Bangladesh, India also, because they were shut down. And that has kind of continued for the first 6 months, and in the last 2 months we see some waning happening over there also. Now, if you had a robust textile and garment sector, which was competitive in the true sense of the word, it would have grabbed this opportunity of taking the market share coming their way and sustained it. I hope they still do, but it looks very unlikely given a number of other factors. Energy being one. The new IMF program coming in once again, which is probably going to, as you say today, in your column, is going to start increasing the interest rates once more. And there is also that really well-trodden territory that we have seen in the past, where you enter into a situation of an overvalued exchange rate. Now, an overvalued exchange rate may not be an important factor in boosting exports, but a competitive exchange rate may not necessarily boost exports if other things are not in place, if your sector is not competitive. But an overvalued exchange rate would certainly create a disincentive for whatever you are able to export. So we're seeing all of those elements creeping in. You may not get an overvalued exchange rate because of the IMF agreement coming back into track, but then your real value, what do you call it, the effective exchange rate will decline because inflation is going to increase. So we really haven't, without, I want to emphasize once again, without addressing those structural concerns or those structural bottlenecks, we're going to keep sort of shuttling around on this boom-bust cycle somewhere or the other, because that productive capacity is just not there.
Okay. Let me just shift gears briefly. We've both of you have talked about the supports extended by the government to industry in the aftermath of the COVID lockdowns. And having done so, generally, governments tend to find it difficult to withdraw these supports because they come to be invested in the kinds of economic outcomes that these supports have produced, politically invested in them. And also they find that having basked in the applause of the country's billionaires for a few months, once these supports start to be withdrawn, that's a pretty fickle community. You know, they can go from applauding you to roundly criticizing you in a matter of days. So I'll just point your attention to two things. Just today, Moody's, for example, has released a report on Pakistan's banks. And it says that we anticipate that non-performing loans will increase with the gradual withdrawal of COVID-19 related support measures. And they're looking at this in the context of the bank, saying that, well, if there's a rising NPL ratio within the banks, then their profitability is likely to be impacted because of provisioning and whatnot. The IMF has also pointed out that the withdrawal of these supports could have a disruptive impact going forward. But that's something that the fund says the government needs to be prepared for. How do you see the political economy of this moment working out as the government moves forward? And if it is pressured, or if it is finds itself compelled to start slowly withdrawing the kind of supports they have extended. How might the political economy work itself out, and what sort of economic outcomes that they have been celebrating thus far would be impacted as a result?
I feel that the government is facing a very, very dire situation. I mean, which you have pointed out. For example, as the support dries off in the post-COVID, as Pakistan starts coming out of the COVID epidemic, they are going to have to cut back on the various relief measures that the state bank, for example, was offering. And non-performing loans are going to go up. And that is going to create a very, very bleak situation for this government, because generally the political tensions are already on the rise. So I think the government, A, cannot afford to have any kind of deterioration in the economic indicators, yet it's a situation that's very rapidly getting out of their control. So I see the government trying everything within their power to keep harping about whatever little performance that they can muster. And I also see them facing a lot of difficulties as the political temperature rises in this country, and as the opposition, as the combined opposition makes use of all this negative economic information coming out and tries to use it against the government. So I see the government in a very, very tight spot in the coming year or so. I think, Khurram, you need to unmute.
Okay, we're approaching closing time for this event, but as a last closing thought, Asad, I'm going to toss this into your court. Today is also important because the NCOC has announced that whatever few remaining mitigation measures that were still in place for COVID are also going to be withdrawn. And then the education minister has announced schools are going to start opening from March 5, a full 5 days a week. No longer any sort of staggered attendance or anything like that. So given that perhaps today we can say that Pakistan has firmly emerged from the COVID impact, the last of the mitigation measures have been removed. How do you see the political economy of the moment moving forward? Because if COVID and its impact are no longer there, then clearly the last remaining justification for maintaining the support measures that the government had put in place is also gone. At the same time. So going forward, as these supports are withdrawn, as the economy is now returning to operating without pretty much without any mitigation measures in place, what sort of a political economy do you see emerging from the movement?
Well, Khurram, I hope that that the NCOC has not acted too soon. And what you just said, you haven't spoken too early. And I do hope that this doesn't initiate a third wave of COVID, because it's not. I mean, to me, it appears that it's being done a bit too early. But then that's been the attitude throughout. To as soon as you can to kind of withdraw COVID mitigation measures, and to let the economy sort of function on its own. I think that a lot of these measures that were taken, if we go into the IMF program, then some of them will be questioned or will be assessed by the IMF, and some of them will either be removed, or there will be an issue of recrafting them in some way or the other. I think the big question that's going to come about is that a lot of the incentives have been monetary. through interest rate subsidies. And now that really begs the question as to how is the state bank going to afford these interest rate subsidies? Is it going to be through a reduction in their profits? If it is the case, then that will impact on government revenue, and it will impact in turn on your budget deficit. And if it's not through that, and if it's through cross subsidies, then which are the sectors which are going to pay for the subsidies that are being given to the chosen few, especially the housing guys? And also the new scheme, the new scheme on capital formation that has been touted a lot, has actually just added 1% of GDP to Pakistan's tax GDP ratio. And Pakistan's tax GDP ratio is where a lot of the problem really lies. Pakistan's tax GDP ratio is 15%. India's is over 25%. Bangladesh is 30%. Vietnam is over 35%. So your competitors are investing a lot more, and Pakistan is investing a lot less. And the private sector hasn't responded to the reduction in the public sector investment that has happened over a long period of time. So we used to invest about 12% of GDP through the public sector. That's down to this year, or last year, it was down to 3%. And after liberalization, the hope was that the private sector will pick up the slack, which it never has. And even with this very generous interest rate subsidy, 450 billion rupees is really nothing compared to what one could aspire to. So going forward, I think that your bottlenecks are going to remain the same. You'd be really working around the issue of the budget deficit and your external balances, and that's going to keep the economy constrained. Yeah.
I was saying many thanks for that, Asad, and thanks to you as well, Aqdas, for joining us. We are at the end of the time for this program. The one thing that one takeaway that I might take from listening to both of you, that the government faced a series of very, very difficult choices when COVID arrived on Pakistan's shores. But it seems that now that it is receding, or at least the government's acknowledgement of the problem is fast receding, it seems that they are faced with an even tougher set of choices on how to extricate themselves from the kind of mitigation measures as well as the kind of support measures that they announced with the arrival of COVID. Thanks to both of you. We do look forward to reading the full chapter and the full report. And thanks to all of you who joined us for this conversation as well. On behalf of the Jinnah Institute, this is Khurram signing off.